Good morning, everyone. This is day two of the DPL open house. Um, how many of you finished up yesterday? I was only on in the morning yesterday because I was streaming and trading from a satellite location. But how many of you put a five in chat if you felt like you got a lot of good information out of day number one? Are we in here? Can you guys? There we go. Good, good, good. Um, yeah, and so it's like drinking through a fire hose, really. If this is new information, and we're sort of live trading and moving fast. Um, I figured today I was going to go through a little more detail on the sniper trades and yeah, five and absorbing, right? We'll go through the some of the sniper trades and how to trade them, so that when I announce them in the room, you can understand what it is I'm doing, and understand the risks. And so today, so if you would listen to my session yesterday, I have two major edges. A third would be just sort of VP day trading. I am a TPS trader like Nate. I look for squeezes on setups with a woodpecker, and then I also have a sniper trade edge, which is a little bit more, well, a lot more of a day trade style, where I'm looking to catch either turns in the market, pivots on the SPX, or continuation trades. And the nice thing about those is you're in and out in a few minutes when they do set up, and you're flat overnight, which for a lot of people is nice because you don't have to worry about gap ups and gap downs. If you're just going to trade these, they're pretty volatile and they move pretty fast, so you have to have good risk management. But you can do pretty well trading these intraday. The only issue is you kind of have to be in front of your computer most of the day. So this is my sniper trade chart. This is the free version, and what you'll see here in this lower section, I talked about this yesterday, what is the ready aim fire indicator. You do not need to own this. You can accomplish these same trades, especially the sniper 2.0, because you don't even really need it, with an RSI and a MACD indicator, right? And so you can see here on my chart, I'm going to close those for a second because it'll give you a little bit better view of the chart. But I've caught two of these today. The blue dotted line being the Sniper 2.0, right? This one's a 2.0 trade. And then the yellow line, which I announced in chat, was a Sniper 1.0 trade. And I can show you the difference and how they work. So I tend to play this on the SPX or the SPY, depending on, the SPX is a 10 times 10 times the SPY. So, one contract of the SPX is the equivalent of 10 contracts of the SPY. So if you're just learning this and testing out, I highly recommend going to the SPY and starting with one contract or two contracts. These are all 0 DTE, right? I'm taking these, and up until about maybe 3 o'clock, 2:30 ish. I'm trading 0 DTEs. If I see some good setups, I'll potentially trade in that last hour, a 1 DTE for the next day so that I'm not getting absolutely destroyed on theta as we get, like, if the trade doesn't work immediately. DTE stands for days till expiration. Okay, so you'll hear a lot, in the trading community about zero DTEs. They're risky, but they're inexpensive. So this is the SPY option chain here. Zero DTE is an option that expires today, and the reason we play these on the SPY or the SPX or the ES futures is that we can access these zero DTEs. Things like Apple, Nvidia, other names like that only have weekly expirations, and then some names only have monthly expirations. Okay, so and the zero DTEs you can buy at the monies here, for $1.35 per contract. That's on the SPY, and then you'll see if we hit over to the SPX, right? If I want a zero DTE at the money, it's going to cost me, $13. So that's going to be a $1,300 position, and it can really move quite quickly. And one thing you're fighting with on a zero DTE trade is theta decay, right? So if you get in a zero DTE trade, you can't really sit on it for 2 hours. And it's gotta move. It can't just go sideways because the theta decay is just rapidly eating away at your option contract. I think early in and out pro. Oh, you mean the candles up here, Nintendo dude? I can get these candles in TradingView for free. But if the early in and out pro also gives you those candles for, I'm imagining you're on toss, thinkorswim. So I think it also comes with Ready Aim Fire. I'm not sure. So if you're a thinkorswim trader and charter, that could be a worthwhile investment for you. But like I said before, we can accomplish that without it. And really, it's only good for the 1.0 sniper. Not that it doesn't really work for the 2.0. So let's talk first, real quick. I reviewed this before, but a 1.0 sniper, right, is a reversal in the market at a bottom, right? So this yellow line, it was a sniper 1.0 this morning, right here, okay? And the conditions we're looking for are oversold. Oh, that's not what I wanted to open. So as you can see, as we came into this bottom, I'm looking for an oversold position, right? And that's my level there is a 35. I've adjusted that to 35 and 65. So we have the RSI line in an oversold position, right? I'm looking for a candle color change from red to yellow, and all these candles are showing is a little early indication of, where is it? Let's see. Is it there? I might have deleted it on accident. Well, basically our TTM squeeze. So this would be red histograms, this would be yellow histograms, this would be light blue histograms, this would be dark histograms, right? So what we're looking for is this gives us a little indication that we're about to change to a yellow histogram. So I'm looking for condition 1 is oversold. Condition 2 is a yellow candle. Have to wait for that yellow candle to close before it triggers. And we're looking for a MACD cross. Okay? And so we had 1, whoops, trying to get my my tool here. We had 1, we had 2, and we had 3 right there. So that was a trigger to get in, right? And as you heard me say, if you were watching chat, I said it triggered in there. I put my stop in just below that drop. And as you can see, right, this thing played out. It coiled. It came off of this point of control level here, right? It pulled back, but it didn't come down all the way. It made a higher low. And then it came up to consolidate a little and shot up, right? And we took it off into that push up, right? And that was, I can't remember what that was. It was maybe 23% or so. MACD cross are these two lines down here, right? This red line and this blue line crossing. So as you can see, all those signals lined up. Now, if you have the ready, aim, fire, you know, and these are all free indicators. Everything you see here, the different color candles, the RSI, and the MACD are all free indicators. So this can be accomplished without having the ready, aim, fire. The ready, aim, fire just shows it has both of those indicators essentially on the same indicator. So you'll see the RSI is down here, right? We're below on the RSI, and we get a MACD arrow cross, right? That shows us, okay, we're down below RSI and we're getting a MACD cross. So in this case, I'm looking for an arrow and a candle color change. Okay. Does anybody have questions on, and the same can be done to the upside, you know, from the top side. So I'm looking for a good reversal point. Today we don't really have one. I'm wondering if we had one yesterday. No, I mean, if we go to like a 2 or a 3 minute chart, you can start to see, I need a better example. Let's see here. Scroll back. That was arcing. Let's see where we are here. I think there was one the day before on a 1 minute. At any rate, we'll probably get one today and I'll be able to teach it live. But on a Sniper 1.0 reversal, all you're getting is a run of light blue, and then you'll get a turn to the dark blue, and you'll be looking for overbought condition in the RSI like it is right here. And you're also looking for a MACD cross to the downside. So you're just looking for the reverse signals. Okay, so what I can do right now is share this chart with everyone that will give you the candle colors, the RSI, the MACD, and it'll give you these clouds, which I'll talk about here in a second for the Sniper 2.0. All right, so if I save that, copy it, Sniper chart in TV. There you go. Bobby, I'll get to those in just a second. Okay, there is a way that I do these sniper trades to protect my capital if I don't trust myself. I've been doing that. Yeah, this is a 1 minute time frame, and what you'll see is depending on the action of the day, right? If you're getting a really slow day where there's not a lot of range, a lot of times I'll switch maybe to a 2 minute chart and do these on a 2 minute chart. Sometimes I'll go to a 3 minute chart, but I kind of like the 1 and the 2 minute, and they work on either one. You know, a lot of times if you get into a trend day, like for instance, there was this one I know for sure. Yesterday, we got this really nice, you know, rounded bottom, but then we just kept pushing up, right? And we're definitely overbought all through here, right? But you're kind of trending. And so you're getting these little signals that, oh, here's a 1.0 reversal. But if you don't take that off at, 10%, maybe 15%, that thing then just reverses again, and you get caught. So it potentially, if you're not careful, you can stop out like, 5 different times, and it just never quite gets what you want. So you have to be careful when you're in a really strong trend move in the market. And if you're not good at managing your trade and controlling your risk reward, and if anybody has experimented with these that's in the room, they can attest to this. If you're doing this by eye and you're not good at your risk management, you can take it down here and not stop out. And okay, now it's going to reverse. We all do this, right? As traders, I mean, we start to trade on hope. Now you're 30% down and you're waiting for it to go here, and oh no, and then it's on its way up here. And you just further and further and further and further underwater. With these kinds of trades, especially when you're trading the SPX, you really need to have good quality risk management. And it's if you're stopping out at 15% and your target is at 25%, you can lose a few and only win 1 or 2 and still be profitable for the day. And so the 2.0, you'll see with the blue line here, doesn't only needs these candle early in, early out signals, and this cloud, which is super trend moving average, STMA is what it's called. If you search for it, it's called super trend moving average, right? Is that right? Hold on. Let's try that again. STMA. Super trend moving averages. Super trended. That's why. Okay. And that will give you these clouds. And the 2.0 trade is, and the reason I came up with the 2.0 version of the trade is because a lot of times on a more of a trend day, when we talk about like over here, you get caught in a trend day and you're stopping out, or taking profits quickly, right? This one I only got a little bit and then it moved up on me, and then I only got a little bit and then it moved up on me. Well, I'd rather capture this larger move than just these little 10%, as if I'm shorting these here, right? So how can we capture a continuation move? And that's where the 2.0 trade style came in, and it's still a sniper trade, but what I'm looking at is I'm looking at these trend clouds. And so this trend cloud is in an uptrend, right? And a lot of times you'll see it'll bounce off the bottom of the trend cloud. But what will happen is, in this case, so this was a put trade, okay, on the SPX put. It was an SPX put. This was obviously a call because I'm trying to catch the move up. I'm looking for a change here between a green cloud and a red cloud. So the trend has shifted from an uptrend to a downtrend on the 1 minute. And with this candle, with this indicator here, this cloud indicator, it actually will print you a little a little white block when that shift happens between the two. Right? You can see it here. It doesn't always give you an outsized move, right? There's another one there. But it will give you an indication that the trend is shifting from up to down or down to up. And then I'm also looking for red candles, right? So in the 2.0, I'm looking for red candles to the put side and a shift in trend. And to the upside, I'm looking for a shift in trend and a move to these light blue candles. Does that make sense? So in here, I'm getting into a put trade, And normally I would ride that until we get into a candle color change. But this little flip happened so quickly that I rode this down to, about this red line here because that was my point of control. And I figured we were coming down to there. And that was more like a 30 to 35% winner there. And when I put those on, my risk management is a stop above the basically the trend line here. So if this had come up and broken above that trend line here as it popped back up, that would have been a stop out for me. Any questions on that? And what I'm going to do next, I'm going to show you how I put these on in Thinkorswim. Yeah, in that last hour of the trading day, really what I try and do is my window for these is usually about. I don't like to take them within the first 30 minutes of the day because there's just a lot of volatility, and usually you have to wait for that volatility to settle in before. So my general rule is, nothing before 10 o'clock. I'm just watching the market. I'm kind of trying to figure out what kind of day we're going to have. Watching the setups kind of come in. If we have any kind of pull at the beginning of the market or a big run up, I'm not caught in that. And then at about 3 o'clock, I've usually made my money for the day. So it has to be a pretty big setup, or I have to feel like, oh, we're going to get a nice run into the close because it's shorts are getting stopped out, that I'll jump into it. But typically in the last hour where there's the most volatility, I will kind of stay out of it because you get wicked out more in those types of trades at those hours, the open and close. Yeah, so on these color candles, you can see if we open one up, there's a fifth color, or color 4 doesn't mean anything. You can make it brown, you can make it whatever. It's just the color 0, 1, 2, 3 that you'll make light blue, dark blue, red, and yellow. Because when you first load this one up, it comes in as different colors. And you don't have to use these colors either. I just use them because it makes the most sense to my eye based on what I've seen. Because I used to have a similar indicator in toss. Okay, I shared the chart, so you should just be able to open that up and it'll load right in, and then you just save it to your trading view, and then you'll have it. But these are called super trend moving average. You just open them up, type in super trend moving averages, and put them on your chart. Okay, so now let me get into how I set these up to manage my risk, right? So we'll do it with a SPY, right? Because that'll be, right now as I'm teaching, I really don't, and we don't have a clear signal, right, for anything at the moment. I'm just going to use my SPY, and I'll do like one contract, but I'll show you how I set it up. Okay, so in my here, so I have, as you can see here, hang on just a second, I have two active trader windows open, and I have I'll put calls on the top, and I'll put puts on the bottom if this is what I'm doing for the day, right? Most of the time my other trades are a little bit more of a swing style trade. So the way I do that is I've set up these two active traders. I can click over to my option chain, and from here, if you see, I've labeled, and this is in Thinkorswim, I've labeled this one as a red, number one, and I've labeled this one as a yellow, number two. And when I'm over in the option chain, I can say, okay, I'm going to choose, normally I would choose the 547s, but let's just choose the 548s here. I'm going to right click that. I'm going to send the calls to red. And then I'm going to come over here and I'm going to right click the puts and I'm going to send the puts to yellow. Now when I'm over here, I have calls up here and I have puts down here. This is just how I set it up. You can set it up however you like. Okay. Now this is Thinkorswim. Okay. So what you see here in this in these two windows is Thinkorswim, and that's what I trade in, but I do all my charting in TradingView. Okay. So now let's say I don't really have a signal setting up here. Well, okay, yeah, let's say we like this 2-minute sniper trade to the downside. Okay, we're getting a signal right there. We're getting, we've already got our blue candles, right? On the 1 minute, it's a little messy, but let's say we like this trade here. Sniper 1.0, we're getting our signals. We just had a close of the candle previous to the downside. So I am then going to come into my put trades. I'm going to just buy one of these right now. You can see how I have 1, 3, 5, 10, 20. I'm going to buy one, and I want to protect myself. So I have a sniper bracket trade where when I put this on, it's going to set a profit target at 25% and a stop loss at 15%, right? And so I'm just buying one. Now, I'm just showing this. This is for teaching purposes. I am not recommending this trade right now because it's a little messy right there. Okay, but I'm gonna buy one. I could just, because it's the SPY, I can just mark it into it. Okay. Now I am in a SPY put on a 2-minute chart, right? And my risk is managed, right? This cost me 97 cents or 97 bucks. This at 25% will take it off at 25 bucks and or $14 loss. So if I'm not good managing my own risk on something more volatile like the SPX, which would be $1,000, and your profit would be 250, and your stop loss would be at 140. You can see how you can make these. This is very scalable, right? So now I can just let the trade happen, right? I've got a 25%, 15%. This, and then what will happen is another way I can start protecting myself is this gets about halfway to my target as it's going. You can see this bracket in here. I can say, okay, well, it's moving the direction I was hoping it was moving. Now I'm going to move my stop loss to 0. So now this is a free trade, right? If this keeps going, I get my profit. If it turns and rips against me, it's a stop out at 0. It was no loss, right? So then I'm really protecting myself from taking large losses within this trading strategy. And for those of you who are doing this for the first time, that's a really important thing to be able to do. Because these, you're going to learn what signals look good, what signals, might not give you your target, and you'll start to feel that out a little bit more without risking a bunch of your capital. And do 25 of these trades, 50 of these trades, see what your profit to loss ratio is using just one contract, right? Now, this is kind of interesting because we've come up above VWAP and we've come back down into it. So on a 1.0 trade, I typically will take profits a little bit earlier. One of the nice things is we are getting a shift. So this is a 1.0 that happened on a 2-minute that is shifting to a 2.0 on the 1-minute. And so that's a good sign for the trade that I'm in. Okay. Does that make sense? Does anybody have any questions there? So we'll see my profit target looks like it'll get taken out here. Okay, there we go. 25 bucks. Winner. There's a 25% winner there. Ed, difference between one or two. I've that's what I've been talking about this whole time. It's a 1.0 is a reversal, and a 2.0 is a continuation trade. Now, if I had me being more experienced and seeing that we're switching from a 1.0 to a 2.0, and it's happening also on the 2-minute chart. I could have come in here and moved my profit target a little more, but I don't recommend that because if you get in that habit and you start doing that too much, you're gonna, because you get greedy because it becomes a greed thing. Then you're gonna move it, and then you're gonna move it past the point where a reversal is gonna happen, and then all your profit that you could have had is gone. My recommendation is to just take that trade with those parameters on your 15 and your 25. And I have another one for 2.0s, which is a sniper scalp. Sorry, for a 1.0 sniper trade, which is a 10% profit, 10% stop loss. And that's just for a quick scalp when I'm pretty sure I know which direction the market is moving. LEC, this toss setup, yeah, I think I can share this one. Let me share the flexible grid. Sniper setup. Okay, there's the Thinkorswim grid. It looks like you'll have to copy that whole link in because it didn't, for whatever reason. I think the exclamation point made it not show up. Yeah, Kathy. So here is what happened. I took a 1.0 trade on this candle here, and a 1.0, which I'll make yellow. And listen, if you're still in this, it's still moving in the right direction, but you are coming into a point of control that we should see. Not only that, this is where chart reading comes in handy. Okay, you see this chart we're in. We're coming into a point of control level, which we should see some support. We are also coming into a trend line level, which we should also see support. So in this case, if I was still in this, I'd be taking profit right here. And yes, it might push through, but I've made my money here, right? and this is a support level on from two fronts. So to me, that says, oh, okay, this is a logical place that this could bounce, right? So and back to Kathy, sorry. So I took a 1.0 trade, right, on this 2 minute chart. I had my indicator there. We went from light blue to dark blue. And we had all the conditions met. So I took that put trade. Now, what happened on the 2 minute chart was a 1.0 put trade. But when I came over to a 1 minute chart, I noticed that as this was coming down and we were becoming profitable, we went on a 1 minute chart we had a 2.0 trade signal. So that was just further confirmation that the 1.0 was going to give me the extension I needed to take profits. So basically, that was a 1.0 that evolved into a 2.0. And you can see we are starting to bounce a little here. And on a 1 minute chart, there's a lot of opportunities. On a 1 minute chart, we might get a signal for a long. But I don't think I would take this long here. I feel like we might just bounce a little and roll and break this trend here. MMK, that's what I've been talking about this whole presentation. A 1.0 is a reversal trade, right? A reversal here, and a 2.0 is a continuation trade. Does everybody understand that? Berserk, it depends on what I'm trading. Um, I've been doing more of the ES futures, but they're all the same instrument and they're all playing in the same range, right? So, if I'm playing the SPX or the ES, I'm one or two contracts at most. If I'm playing the SPY, if I'm trying to play a little lighter that day, it's maybe, 5 contracts, something like that. And a lot of times you can take off a couple. The nice thing about the SPY is as you start to get more confidence with this kind of trading style, is you can go from 1 contract to 2 contracts to 4 contracts as you start to feel out how these trades come together, and you start to prove that you're profitable. And that's one of my main recommendations is with any edge that you have or that you're using, make sure that you know how to do it on a scale that is small, right? You might have a $400,000 account, and which would mean you could take 10 SPX contracts, but if you don't learn how to trade these and when to take profit and what the price action looks like and kind of what might happen and how easy is it to get in and out of the option contracts, I mean, you could be losing $30,000 in 2 minutes because the SPX is so volatile and you're just trading too much. So my recommendation is trade 1 or 2 SPY contracts until you can prove and you need to journal it out, right? You need to journal wins and losses and what mistake you think you made on the losses. You learn more from analyzing your losses than you do from analyzing your wins, in my opinion. Bobby, I find that the 25% profit target gets hit pretty frequently. There are times when when I maybe have to take it off before that because I see a reversal coming. Um, but for those of you who are learning, using that 25 and 10 or 25 and 15 is just a great way to be able to put the trade on, and then whatever happens. You're not changing anything. It's either going to take your profit target out or your stop. But it doesn't. The decision has been made, and that's one of the big things in trading that is everybody's going to have to figure out for themselves. And I know I did, and still do struggle with from time to time, is the idea of hope, like trading on hope. Like, oh, we've all been there, right? Let's say we're here. I mean, I guess we can be here. It doesn't really matter. Let's say you tried to bounce this sniper that I was talking about potentially setting up, right? Well, of course it's not working. And if you were trying to bounce that, your stop should have been here. Well, we've all done this, right? Whether this is a day trade or a swing trade or whatever. Now we've come below our stop level, but we haven't stopped out, let's say. And we're like, okay, well, I'm only down 25%, and I see, there's another low here, so it's probably gonna bounce there. So I'm gonna hold that trade, right? And then it does bounce, or you try and add here, and you're like, okay, I'm gonna get back out of this, and it's gonna be great. And then you get this roll here, and then you're like, all right, well now I'm down 50%. I don't want to take that off. This is how your brain is. This is how everyone's brain works, by the way. And you have to get past this, right? And then you're down here, and you've added. Oops, sorry. You're down here, and you've added, and then you get this big flush, and you're like, oh, okay, shoot. Well, if I take this off for 75%, that means I just lost 75% of my trade, and that I'm a terrible trader. So I'm just going to leave it on, and it's going to bounce. I hope it bounces and gets me back out to zero. And you're spending not only your own capital watching this thing bleed away and potentially adding to it, you're also spending your mental capital, right? And we all struggle with this as beginning traders, and I'll be the first to say occasionally I still do this, and then once I do, I have to kick myself in the ass pretty hard, and be like, "What are you doing?" Like, and I've traded long enough that I can trade myself out of things that are going against me, but it's just such a bad habit. It's just I do much better when and you'll hear D-Man talk about this as well, and he has a cold heart, D-Man. He has no emotion whatsoever, and that's a great thing for trading, by the way, because he can be like, that didn't work, great, cut it, move on, right? And so with these kinds of trades, you have to have that element of okay, it didn't work, that's fine. I trade probably I make probably six to eight of these trades in a day, roughly, and there's at the very least there's two losers in there, 1 to 2 losers, and then on some days, depending if it's really kind of a choppy, weird day, there's half of those are losers, or more. So you're gonna lose. They're not all gonna be winners, and you're going to be so much better by just cutting that loser as soon as it's a loser and forgetting about it. And not, because like I was saying, is you're also spending your capital as this thing's drifting down, right, and bouncing, and but you're also, let's say it's a swing trade, like, God, I just want this thing to bounce, or God, I'm just losing so much money. And 5 days of staring at that chart, you could have cut it 4 days ago, right? And had 6 other trades that 4 of them worked, but no, because your attention was on this thing and you're just watching it, and you're hoping that it bounces, right? Yeah, we're getting a nice little flush here. So had you held on to that 1.0 to 2.0 rounder, you'd be at 100% right here. Now, I would have taken it off. I took it off a little earlier because I was proving a point, but I would have taken it off here because that was a logical place for this to bounce. But we got a little mini bounce and then a roll. But this break here of both of those trend lines was a good spot. I was just in the middle of a psychology lesson. We got this breakdown and retest. That would have been another great place to short for a flush. Yeah, Diana, I mean, what I just described happens to every single one of us in here. So when I say that, and everybody's like, "Oh, it feels like you're sitting over my shoulder." It's like, yeah, because I've been a new trader before, and like I said, I still will occasionally make that mistake, and I have to punish myself basically by you know if when I do that, I have to put myself in jail, so to speak. And okay, well, I can't trade the rest of the week because I was dumb. Because that's all about capital preservation, right? We're all trying to grow our accounts, and that's the most important thing. Yeah, that's a great point, Janice. If you can paper trade these, so for instance, let's go to the SPY, right? Let's say I think a bounce is coming. I don't, by the way. I mean, it might come, but let's see. Let's see. I'm going to try and play for a sniper bounce. As you can see, on the SPY and the QQQ, you can set up a paper trading account in TradingView. If you have TradingView, right, you just pop open this paper trading button down here, and you can set up a paper trading account, and you can practice these. And the cool thing about it is, like this is set to buy 500 spot that you can't buy options, but you can buy the underlying, right? So let's say we wanted to come in here and we wanted to buy 50 of these. Okay, so let's say I thought it was going to bounce right now. I don't have a signal, but just for educational purposes, I could say, okay, buy. And you can see you have your profit and loss here. And you can also say, okay, I'm going to take my stop loss to just below the swing low. And I'm going to take my profit target back up into that point of control. And now that trade is on. I'm going to lose 11.50. I mean, this is paper trading, right? And I'm going to make $58. And you can practice these. Yeah, and one of the other aspects to this is also you can kind of see, you can kind of chart when those drops are gonna happen by watching the ticks. All right, you don't really want to take a put trade if you're up here in the 6 and 900 level on the ticks. You want to take that put trade when you're kind of down here in that 600, and then ideally see it move into 900 and 1,000, and you're like, okay, I'm trading in the right direction. Right? So here we have a 1 minute SPY. We have to wait for this candle to close. I'm already in it, so I front ran it, but just that was for an example. And this is not real money, right? This is paper trading. But we're starting to get a signal here, but we have to wait for that candle to close. You can see that signal just went away. All right? So you always have to wait for the candle to close. You can see we are in an overbought condition on the RSI, but we don't have a MACD cross, which you can also see, we don't have a yellow candle up here either. So the signal's not quite there yet, and now we're going to get a flush or potential just a retest of that low. But these are all very accomplishable without this indicator is like $700. So my recommend, and I don't think you need it. You certainly don't need it for the 2.0 trades. I don't think you need it for the 1.0. I've just had it for years because I bought it for something else years ago. And when we were developing this idea, it was giving signals that worked with the idea. and I'm always playing with other indicators out there to see if there's one that gives a better signal. But for now, I mean, you can do that without any of those indicators. All right, so that was a in-depth Sniper 2.0, 1.0 and 2.0 lesson. See, I just got stopped out there. So nice job, Jerry T. Does anybody have any questions on that? JBT, sometimes I'll use a 10 and 10 if I'm trying to scalp a quick move. So I have both of those set up, and I have a video on YouTube on how to set up these bracket orders so that as soon as you're in, you have an exit, other cancels, other profit target, and stop loss exit order. So here, remember I front ran that. Now we're getting a signal. This candle's about to close. Right, so it closes yellow. We're getting our signal with the arrow, and boom. So you could say, okay, I'm going to try that one more time. And I'm going to put my stop loss below the swing low. And I'm going to put my target up here. And we're going to let that trade play out, right? It's on. And it's going to do what it's going to do. And now this is a paper trade. Again, you can also do that with your thinkorswim. Right? And this one would be a call, right? So in that case, if I liked this trade and I was going to put it on right now, I'd come up to my calls, and if I was going to do it live, I'd go like that. I'd put that into the red category, and then I'd make sure I had my Sniper SPX, right? And then I'd buy 1 or 3 or 5 or whatever, and boom, my order's in. And on that YouTube, there is, if you go down, if you want to see a bunch of videos on the Sniper trade, there's a bunch of there's a playlist at the bottom that has, anytime I do, with this one included, when I put it up today, will be in the Sniper playlist. So you can watch, all the videos that pertain to the Sniper trade are in that playlist, so you can watch them, and then you don't have to go through all the other videos. But there's so many other videos on how to trade TPS, volume profile, setting up charts for TradingView. So if anybody has any questions or needs any kind of specific trading education, there's some there too if you go in. Okay, that is it for me. I believe we are rolling into the lunch hour. So what you'll see is Nate Bear's screen will be up, but there will be an off mic signal sign on it. So me, I am Nate G. Myself and D-Man trade with Nate Bear. But this is Nate Bear's service, so he's the only one that puts his trades in the trade alerts. D-Man and myself generally just put it in chat, or if we happen to be on the mic, like I was for that one live trade, then we voice it, but we don't put our trades don't show up in the trades tab. So you kind of have to keep an eye out for them. Yeah, I will post this session to that YouTube, within the next hour. So yeah, we're getting a nice flush here, and you can see, the ticks are down around 1,000. So the flush is real. And then this afternoon, I don't know, I'll do a lesson on. I can do a lesson on volume profile. I can do a lesson on charting. I can do a lesson on, think about what you guys might like to learn. Yeah, D-Man and I are a part of this service. That's correct. And today you're getting more of D-Man and myself because Nate usually uses Tuesdays to get his a lot of his life stuff taken care of and other work stuff. And so usually it's D-Man and I are on the mic more on Tuesdays, but we're each on almost every day. D-Man usually trades the open, and I usually come on about 11:30 every day. Uh, and our main goals, I mean, the reason D-Man and I are in the room with Nate Bear is we just love teaching what we love to do. I love showing people how to do things that I just have a passion for. And it's awesome to see. It's awesome when people come in and say, hey, I used your recommendation or your trading idea, and I did it on my own, and I made 80%. That's just such a satisfying thing, right? To just know that someone else is finding success with something that you showed them how to do. I think is just awesome. I love that feeling. So and I think today is the last day to get the special offer. I think the $300 off offer. So I know some of you may have joined us yesterday. Welcome! I can't wait to get rolling as the this week concludes and we get into the latter half of the year with trading. I'm really excited, and for those of you who haven't yet, I hope you do. We have a lot of fun in this room, and you'll see a little bit later. We'll get a Three Amigos session, and we will just needle each other for an entire hour. It's pretty funny. So. All right, everyone, that is it for me. I will be back on a little bit later today, but it is the lunch hour, so no one will be on mic, I believe. Mods, if I'm wrong, please jump in and make me look stupid. But I believe we are off for the next hour. Okay, take care.